10 California cities, including prestigious coastal and Silicon Valley communities, are experiencing notable price corrections in 2026, with median home values declining between 2 and 40% year-over-year in markets historically considered among the state's most stable and desirable. Before we dive into the cities, I need to be extremely clear about something. Nothing in this video is financial, investment, or real estate advice. What I'm providing here is analysis and commentary on publicly available market data, sales statistics, and pricing trends. All right, let's start with number 10, Chula Vista. Chula Vista in San Diego County has been positioned as offering value relative to higher-priced San Diego County coastal markets. Data shows corrections occurring. Average home values show 2.1% decline over the past year according to some platforms, while other data indicates median sale prices at approximately $797,000, down 11.2% year-over-year. Premium neighborhoods show higher median values. Some segments carry median home values over $1.3 million. Days on market have increased substantially, from 22 days a year ago to 43 days currently, nearly double. In a market known for competitive, fast-moving transactions, extended market times indicate shifted buyer sentiment. Number 9, Carlsbad. Carlsbad, at northern San Diego County's edge, has reputation built on coastal lifestyle, highly rated schools, and resort-quality amenities, attracting affluent families and executives. Current data shows median sale prices approximately $1.4 million, down 5.6% year-over-year. Median listing prices are approximately $1.5 million, down 6% year-over-year. Transaction volume declined significantly. 79 homes sold in February 2026, down 19.4% from 98 in prior February. Nearly 1 in 5 transactions disappeared in a single year. Homes selling above list price declined 11.9 percentage points to 27.8%. Homes with price reductions climbed to 25.8%. A quarter of Carlsbad listings are being reduced before finding buyers. In premium neighborhoods where median listings exceed $2 million, a 5.6% decline represents over $128,000 in value adjustment. Number 8, San Diego. San Diego historically has been viewed as stable California market supported by military presence, biotech industry, world-class beaches, and lifestyle premium. Current data shows median sale prices approximately $930,000, down 5.7% year-over-year. Median listing prices are approximately $889,000, down 6.4% year-over-year. Countywide single-family median stands at approximately $1 million. On homes that sold for $986,000 a year ago, 5.7% decline represents over $56,000 in value adjustment. In premium coastal neighborhoods crossing the million-dollar threshold, dollar losses run significantly deeper. Homes now sit for 34 days on average, up from 27 days a year ago. Active listings climbed 7.77% year-over-year. Share of homes selling above list price dropped 5.6 percentage points. The rental market confirms pressure. One-bedroom rents declined 5.6%. Two-bedroom rents declined 7.5% year-over-year, driven by 15% rise in active rental listings. When both sales and rental markets weaken simultaneously, demand challenges become clear. Number 7, San Jose. San Jose is Silicon Valley's engine room, home to tech companies that built modern economy. Housing market reflected every IPO cycle and stock-based wealth wave. Current data shows median sale prices approximately $1.33 million, down 7.9% year-over-year. Price per square foot fell 4.5% year-over-year to $841. Median home prices show 8.18% year-over-year decline, with homes experiencing price reductions climbing to 34.43%. Nearly 1 in 3 San Jose listings is being marked down before finding buyers. On a $1.3 million home, that's over $114,000 in lost value in a single year. Overbidding dynamics collapsed substantially. Homes selling above list price dropped 10 full percentage points year-over-year to 59.7%. Sale-to-list ratio fell 3.1 points to 103.7%. Demand isn't absent, but purchasing power constraints are evident. Sacramento is now top destination for San Jose home buyers searching to leave, indicating the math of staying no longer makes sense for growing numbers of residents. Number 6, Oakland. Oakland spent years positioned as Bay Area's hidden gem, more authentic than San Francisco, more accessible than Silicon Valley. Neighborhoods like Claremont Hills and Claremont Elmwood crossed million-dollar thresholds. Current data places average home values at approximately $700,829, down 9.1% over the past year. Median listing prices are approximately $650,000, down 7.01% year over year, with price per square foot falling 4.73%. This isn't just affordable housing correction. Claremont Hills lists at approximately $1.5 million. Claremont Elmwood at approximately $1.3 million. On a $1.5 million Claremont Hills home, 9.1% decline represents over $136,000 in lost value in a single year. Million-dollar neighborhoods are declining alongside everything else. Active for sale listings dropped 22.33% year over year. In most markets, shrinking supply pushes prices upward. In Oakland currently, it hasn't been sufficient to stop declines, indicating the challenge is demand side rather than supply side. Number 5, Palo Alto. Palo Alto is Silicon Valley's intellectual capital, home to Stanford University, surrounded by company headquarters that change the world. A city where modest 3-bedroom houses on standard lots routinely trade above $3 million, with prices historically justified by surrounding ecosystem. Current data shows median sale prices approximately $3.28 million, down 9.63% year over year. Median listing prices are approximately $2.96 million, down 18.19% year over year. On a $3.2 million Palo Alto home, 9.63% decline represents over $308,000 in lost value. Active listings increased 39.47% month over month, adding supply pressure to a market where prices are already declining. Days on market climbed 25% year over year. Even in Old Palo Alto, where median listings exceed $10 million, corrections are measurable. Number 4, Santa Monica. Santa Monica, where beach meets billion-dollar zip codes, offers walkable streets, world-class restaurants, and internationally recognized coastline that historically attracted buyers paying significant premiums. Current data shows median sale prices approximately $1.82 million, down 12.1% year over year. Average sale prices show larger declines, down 27.3% to approximately $2.6 million, with price per square foot falling 15.1%. Transaction collapse is substantial. 46 homes sold in February 2026, down 36.1% year over year. Sold properties dropped 42.6% in tracked periods. More than 1 in 3 transactions has disappeared from this market. Average days on market increased 92.9%. Homes sold above list price dropped 18.4 percentage points. The overbidding era that defined Santa Monica for years is effectively over. On $2 million Santa Monica homes, sellers are leaving average $30,000 on the table just to close before concessions. Number 3, Santa Barbara. Santa Barbara earned American Riviera nickname through Old Money, California Sunshine, and Montecito estates trading in tens of millions. Lifestyle premium historically justified every dollar of pricing. Current data shows median sale prices approximately $1.85 million, down 16.9% year over year. On properties that sold for $2.2 million a year ago, that's over $370,000 gone at closing tables. Single-family home median prices show 26% year-over-year decline to approximately $1.975 million. Luxury correction is most visible in Montecito. January 2026 recorded just 9 property sales there, a 65% decline from prior January and lowest January transaction count since 2018. By March, Montecito and Hope Ranch luxury median showed 30% year-over-year decline to approximately $3.75 million, with homes sitting average 73 days. Since major wildfires, buyer psychology shifted measurably. Insurance availability, fire risk exposure, and long-term ownership costs are front and center in every serious purchasing conversation. 60% of Santa Barbara homebuyers search to leave the city entirely in recent tracked periods. Number 2, Pacific Palisades. Pacific Palisades was among California's most aspirational addresses, with ocean view estates and celebrity neighbors where $3 million homes were considered starter properties. January 2025. Palisades fire changed everything fundamentally. A year later, market data tells a story still unfolding. Median sale prices show 16.7% year-over-year decline to approximately $3.5 million. Median listing prices show 40.24% year-over-year decline. Analysis of county assessor records found average sales in burn scar areas dropped from $3.6 million to $2.4 million. That's $1.2 million gone on single properties. Active listings exploded 181% year-over-year. Foreclosures are rising. Foreclosures. 44% of homes sold in burn scar areas were purchased by corporate entities, roughly twice the national average. Investors are moving in while families move out. What happened in Pacific Palisades sent hesitation waves through every premium California market. Fire risk assessment indicates 96% of Pacific Palisades properties carry major wildfire risk designation. Every buyer today purchases that risk alongside views. And number 1, Calabasas. Calabasas is where California's wealthy come to privacy behind gates. Celebrity estates, guarded communities, zip codes signaling success. Current data shows median sale prices at approximately $1.59 million, down 33.8% year-over-year. On homes selling for $2.4 million just a year ago, that's nearly $800,000 in lost value at actual closing tables. Median listing prices sit at approximately $2.25 million, down 12.64% year-over-year, with additional 9.7% monthly decline. The correction is accelerating. Homes sit for 72 days on average, up from 48 days last year. Only 14 homes sold in February, down 12.5% year-over-year. Fire risk assessment confirms 100% of Calabasas properties carry severe wildfire risk designation. In a post-wildfire market environment, buyers aren't discounting that anymore. So those are 10 California cities experiencing price corrections in 2026. What are the common patterns? First, all are premium markets that experienced substantial appreciation over extended periods. Second, all are experiencing days on market extensions, indicating buyers are taking longer to commit. Third, all show transaction volume declines, suggesting fewer buyers are entering markets at current price levels. Fourth, all demonstrate weakened overbidding dynamics, with fewer homes selling above list prices. Fifth, wildfire risk and insurance availability have become front and center considerations affecting buyer psychology, particularly in Southern California coastal markets. The corrections range from modest single-digit percentages to substantial double-digit declines depending on location, price point, and specific local factors including wildfire impacts. These aren't predictions of future catastrophic outcomes. These are current realities based on 2026 transaction data showing where premium California markets are adjusting from previous peaks. For current homeowners in these markets, understanding that selling timelines have extended and that pricing strategy matters significantly is important. For potential buyers, these corrections create negotiating opportunities not available during peak appreciation periods. For investors, careful analysis of which corrections represent temporary adjustments versus fundamental repricing is essential. The question the industry continues analyzing is whether these represent temporary corrections or permanent repricing of California premium real estate relative to incomes, interest rates, insurance costs, and changing buyer priorities. That answer will emerge through continued monitoring of transaction volumes, pricing trends, days on market, and buyer sentiment over coming quarters. That's the breakdown of 10 California cities experiencing price corrections in 2026 and the factors driving these adjustments in historically strong markets. Thanks for watching. If you found this analysis helpful, let me know in the comments. Tell me which market's correction surprised you most, or if you have experience with premium California real estate dynamics. And if you want more content breaking down luxury market trends, price corrections, and premium housing dynamics with no hype and no fear-mongering, just data and analysis, subscribe to the channel. I'll see you in the next one.